Good morning, everyone. Hope you had an awesome day yesterday. Before we jump into today's program, I want to call attention to an impactful video that Carlos Calderon, President and CEO of the Organization of American States Federal Credit Union and a longtime partner, shared at one of the track sessions yesterday. It underlined members' views on sustainability. It is such a personal and moving clip we thought we would share with everyone here. So let's take a look.
Oh, you hit the right guy.
Really quick question. Do you care about sustainability?
Yes.
I mean, of course I care. I think everybody should.
I do. I really do.
It's my number one fear.
You'd have a hard time finding someone who said that what we do now doesn't affect the future.
I don't think about it as much as I should. It definitely should be on the forefront of my mind, but I don't know. I feel like we're trapped in this system where you have to go to Walmart to get something.
When I think of sustainability, I think of survival.
Well, it just means taking care of the environment and being judicious about our resources.
It's a lot about just consumption awareness, making sure we're getting our uses out of the things we have.
There are only limited resources.
This is our planet, this is our Earth, and we gotta make everything last as long as possible. A society or a peoples who depend on themselves to get the resources that they need.
We recycle. We try to thrift and reuse things.
Try to limit single-use plastic.
Find vintage items and reuse things that, would just be thrown away.
I'm pro recycling, big green team.
Being conscious about where our waste is going. I feel like we all lived a little bit more sustainably, then we could actually put a dent in climate change and change things.
I think sustainability is incredibly important because if you don't think about it, then humanity ends. A little too dramatic.
As a species, we've been here the blink of an eye. It's whether we sustain ourselves, whether we exist.
I really believe in capitalism, but I believe in environmental economics at the heart of it, and we should be assigning the true cost of the degradations that are being put onto our world, our community, our society. We just are mindful about doing business with organizations that care about sustainability as well.
If the choice is between somebody making a positive impact in the world and not, I'm going to choose the, one that is.
If you had credit unions, banks, whatever it were, and you lined them up and they all offered the same type of services and you were going to get the same amount of excellence from them, but one had sustainability as part of what they cared about, then I would choose that.
Having companies such as credit unions trying to do their part to reduce their effects is a great way to start. And as more and more places start to do things like that, we're going to start to see some sort of impact.
I love being part of a credit union. I've been part of a credit union since I was 18 years old. I love it because it's so personal. It just feels like our money is safe with our credit union.
I do enjoy being a member there. They helped me a lot to get an auto loan. Well, I got a car loan through a credit union, so I felt like that was a good way to do it instead of maybe like a bigger bank that, you don't have any personal connection with.
You try to make small short-term changes to have a larger impact.
I want to leave the world better for my children.
I want to live in a world where I can get up in the morning and not be affected throughout my day by the things that were done by others in the past.
Sustainability is about making smarter choices.
Better practices across the board and people really caring from the bottom up. I think everyone has to do it because if you don't, you're not looking out for the future.
Go green, be better, make this world a better place, not just for you, but for the future and for the future generations.
Wow, that sums up nicely why we do this work. So really, what a diverse program we had yesterday. We mentioned last month the UN Summit of the Future took place here, resulting in intergovernmentally negotiated action-oriented pact. One key chapter focused on science, technology, innovation, and digital cooperation. Being a technologist, this is near and dear to my heart. The summit also led to the creation of a global digital compact and a declaration on future generations, highlighting the UN's growing partnerships with various stakeholders, including financial institutions. The compact aims to ensure that science, technology, and innovation drive a more inclusive, equitable, sustainable, and prosperous world where all human rights are fully respected. The report stated, and I quote, "Digital and emerging technologies, including artificial intelligence, play a significant role as enablers of sustainable development and are dramatically changing our world. They offer huge potential for progress for the benefit of people and planet today and in the future." We will definitely keep an eye on these developments and innovations that have potential to step up the pace of the SDGs according to outcomes from the Summit of the Future. The topic of inclusivity is a theme woven into our sessions today. As many of you know, Inclusiv is a certified community development financial institution, or CDFI intermediary, that provides capital, builds capacity, develops innovative products and services, and advocate for member community development credit unions. These CDFIs serve low-income, marginalized communities, solar panel homes, heat pump installations, trainings, and sessions on financial inclusions are transforming lives. Getting us up to speed on these developments are panel moderator Neda Arabshahi, Senior Vice President of the Inclusiv Center for Resiliency and Clean Energy, and panelist Terri Mickelsen, CEO of Clean Energy Credit Union based in Colorado, and Romano, CEO of Marisol Credit Union located in Arizona. We're also very happy to have Tucker Bartlett, Executive Vice President of Self-Help Ventures Fund, who will provide the Community Investment Fund perspective and update on many positive outcomes of the Inflation Reduction Act and the Greenhouse Gas Reductions Fund. We're privileged to have such expertise complete with interesting case studies to share. Residents of the Southwest US are feeling unprecedented effects of climate change. This summer was the hottest on record in Arizona, with an average daily temperature of 99 degrees, 2 degrees hotter than last year. Arizona also saw the most consecutive days with a high above 100 degrees, with more than 100 days of heat from June through August. We're all ears for your discussion, clean energy experts. Neda, please lead us off on financing a resilient future, navigating the clean energy transition.
Great, thank you so much. Thanks everyone for being here. Thanks to our wonderful panelists. We're really excited to share all the great work that they've been doing. As Prasad mentioned, there's been a lot of very evident changes in day-to-day experiences with the climate. We've seen weather patterns change. We've seen communities developing new needs as that evolves. Different parts of the country are hotter or colder or wetter or drier or experiencing more fires or experiencing more drought. And as these things change, the communities have different needs that both are nice to have, but also often are critical to have to protect people, to protect health, and to keep everybody safe. So we're seeing people needing air conditioning in places where they historically didn't. We're seeing people needing to flood or fireproof their buildings. We're seeing, as always, that people need reliable sources of power, but more often there are interruptions to access to power grids, and the people who are most vulnerable are impacted most severely by that. People who need to be on oxygen, people who have medications that need to be refrigerated or medical equipment that needs electricity, just people experiencing extreme heat or other local changes that they were not prepared for. So what we see is, as that happens, affordability becomes even more important and also becomes an even greater challenge. People are experiencing higher than ever or more unpredictable than ever energy costs. people are sometimes having to choose between food and medicine and electricity or other energy costs. And what we see is that credit unions have a really important role to play in this. Affordable, predictable, consistent, and clean energy sources that are suited for local climates and local weather conditions are critical, and credit union members increasingly have a need for access to affordable solutions. Today, we're going to hear from 3 different credit unions that have been financing a resilient future for their members. As Prasad mentioned, we're really excited to have Terri Mickelsen, CEO of Clean Energy Credit Union, Robin Romano, CEO of Marisol Federal Credit Union, and Tucker Bartlett, Executive Vice President for Self-Help Ventures Fund. And today we're going to start with Terri. Terri, we'd love to hear from you. Tell us about your credit union, your members, and how your weather and climate has changed for your members and what your credit union has done to respond with new loan products to help them meet those needs.
Sure. Well, good morning, everyone. We are a Clean Energy Credit Union. We have been established since 2017. Did our first loan in 2018. I'm here in beautiful Denver, Colorado. Colorado just this month has only had 2 days below average. Every other day has been above average. We're in the 70s today, where we're usually in the 60s. So it's pretty apparent, the changes that we continue to see. We are also a national credit union as well. So we, where we have our home office here in Englewood, Colorado, we do help members across the nation and continue to provide products and services that really meet those needs. When we started our credit union, we really wanted to promote a credit union that is aligned with our mission to make clean energy more affordable. So we wanted to, start something in the solar. Of course, it was a nice, great way to start. We've added on products as we've gone, including geothermal, green home improvements, where you have windows and insulation and everything else that we can help members with to help ease their energy burdens. So we also have deposits that come in, and we use those, of course, to fund these projects. So we have a completely sustainable credit union in that all deposits that come into our credit union go out in clean energy lending. So it's been really fun and great to get started with a credit union that is able to align our values with the values of our members as well.
Terri, are you able to see the slides? You want to walk us through your slides?
Okay, there we go. Thank you. Now I can.
Oh, great.
I was like, well, I didn't know if I was.
And just say next slide when you want to advance.
Forever about this, so I can keep going on. So it's good. Since we started in 2017, we did our first loan in 2018, and it was in April. And the gentleman's name was Chris. I'll never forget. It was our first loan. We were so excited. Since that time, we have done over 13,000 loans. And we continue to, of course, grow every month. And we have 9,700 members, $243 million in loans that we have been able to do. And we have currently 47 million in member deposits. And we're hitting almost the 1 million mark. We're hoping to hit it by the end of the year in carbon offsets. So we talk about in our employee meetings when we talk with our members and such, we really want to emphasize not so much, what we're doing, but the impact that we're making. So that's very, very important to us, is really talking about the positive impact that Clean Energy Credit Union makes across the country. We really feel in as part of what we've done since we've started, we've partnered with Inclusiv. We've helped other credit unions as well. We know we can't do this alone. So we feel that credit unions have, of course, a great ability to help people in their communities. It's people helping people. We understand our needs of our members, and we can go out and help them fund these type of projects. We can help them, help them reduce their energy needs and make green loans more affordable. One of the reasons we got into doing what we do is because some of the alternative methods people were using to finance were kind of taking advantage of the members, making the products more expensive. And what we do best as credit unions is make things affordable. And that is really where credit unions come in and just will be able to go out there and help in some way. You're probably already funding green loans. Those of you might have your own specific products, but most of us, and I've been working in credit unions since the late 80s, but we do home equity loans, we do unsecured loans and credit cards and everything else that are buying these products, but having those products that are centered around them, they can come and think of us first when they're going out instead of using another loan product that might be a little bit more expensive for them. So we can help them save some more money. And, we talked about the energy burdens and helping underserved communities. And I know that Robin will be speaking a little bit more about her communities. We are national, we're online only, we have no branches. So we do a lot more of working with partners and people finding us online and helping members that need that through Google searches or through one of our partners that we've working with. But we've also started a Clean Energy for All program. And it's because that we understand that the energy burden out there is in the underserved community. Our Clean Energy for All program specifically helps people low to moderate income in our BIPOC communities. And we understand that those are the ones that have the highest energy burden, where it is sometimes unaffordable for them to, heat their homes or to use their air conditioning. The barriers that we see to clean energy is that there are high upfront costs. So making these loans affordable, we try to really look at what their energy costs are now and make the loan payment close to what their energy costs are, so there's not, and hopefully making it better. So we can, of course, help them save more money. And we understand that renters will not be able to take all of these, tax credits. They can't just go put solar on. So we do have to help out to make it affordable for people that maybe own those buildings. So there'll be some other things that maybe Tucker will be talking about later on as well. So we do really look to help people lower their energy bills, make positive impacts on our communities. And of course, we know that the clean energy movement will help to create jobs out there as well.
Great. Thank you so much, Terri. It's really exciting to hear all the amazing progress that Clean Energy Credit Union has made in such a short period of time. Next, we're excited to hear from Robin Romano, CEO of Marisol Federal Credit Union. Robin, I'll ask you the same question. If you could please tell us about your credit union, your members, how your weather and climate has changed, and how your credit union has responded with new loan products to help your members meet their needs. And you can just say next slide when you're ready.
All right. Well, you can bring the first slide up. Good morning. I'm Robin Romano, and I live in lovely, very, very hot Phoenix, Arizona. We already had mentioned of how hot it has been here, and it has been extremely warm. Marisol is a community development financial institution. We're also a minority deposit institution. meaning that over 50% of our members and board are part of a group, and in our case, it's Hispanics. We do serve the greater Phoenix area, so I'm not national, I'm very local. Much smaller, 50 million in assets, serving 7,500 members, and that seems a lot, but being a community development financial institution, we're also serve low-income people, and so I have a lot of members with very low deposits. We have about 21 staff, and I'm proud to say that we have 4 graduates from the Inclusiv University of New Hampshire Solar Lending Program, and giving that a shout out and things for you to consider here in the future. Next slide. So, why are we in this business? We decided a few years ago to put sustainability and to put energy efficiency into our core values and our mission here. We understand its importance. One of the reasons is because it's just getting plain hot and hotter. There were 645 people who died of heat-related deaths in Maricopa County in 2023. So far, we have 389 with another 292 deaths that will more than likely also be considered heat-related deaths. That's a lot of people who are dying because of heat. We always hear about the cold, but we don't always get a lot of press about the heat, and it does matter. As our first we were told, we've experienced a lot of consecutive days over 100 degrees. It was actually 113 consecutive days over 100 degrees, and it was 56 days over 110 degrees. Yeah, it's a dry heat, but it's still a heat. You want to know what it feels like? Turn on your oven, put it at about 400, and then stick your head in it. That's what it looks like in the summer here in Phoenix, Arizona. So, why does it matter? It matters to our members for a basic reason of keeping cool. It costs money. Reducing cost helps our members. And for all the things I said above, it also matters because heat kills. So energy lending is not only about efficiency and reducing costs, but it's also about, care and health. Next slide. So we started lending fourth quarter of 2022. We've made $1 million, actually a little bit more in solar loans. 36% of that is to low income. We've made about 400,000. Ooh, I have a big typo on that one. In energy efficient loans, mainly air conditioning loans. 58% of that has been into low income areas. You can use an loan here that we've created. We've created a specific product for that, for solar, for repairing your roof to install solar, windows, window shades. That's actually a really important thing here in Arizona. Solar water heaters, heat pumps, efficient air conditioning. And then we're now getting very popular, our solar mini split air conditioning units. So it's for a wide variety of uses, and we're probably going to start to add solar generators to this list as well, because as described, sometimes, power goes out. If we're continuing to have these hot days, I can guarantee we're going to have brownouts in Arizona as well. Next slide. So, what would I advise of how you guys get in, to think about what you should consider, especially if you are a CDFI or a low-income credit union or anybody, educate yourself about energy lending. I'll give another shout out for taking the class for Inclusiv. And I should probably make mention, I am the Inclusiv chairman. So it's a wonderful school. If you don't know anything about it, go up to the Inclusiv site and learn more about it. You need to educate yourself. You need to learn about costs. You need to learn about what a kilowatt is. You need to learn about rebates. There's a lot to know. And so educate, educate, educate. Use good partners. We use Inclusiv Prosperity Capital for our solar lending. They help us with finding vendors and making the system much more efficient for us to do solar loans. You also need to go out and talk to your community, talk to partners. As our next speakers will go through, there's a lot of money coming our way that we can use And it's not just credit unions, it's going to be a whole range of community partners who are going to be able to utilize this money. And many of them are going to spend the time to educate their partners or to their communities and so forth. Look, low income, especially in the low income communities, it's not an easy sell. Why? Because they're thinking about, how am I going to make my rent payment? How am I going to do this? How am I going to do that? Not, should I put solar panels on my roof? And maybe that's not their answer. Maybe their answer is putting a whole bunch of insulation in the attic and putting a better air conditioner in. But you got to be able to talk to them. Now, loan products. Make sure when you're developing your loan products, and we have a product for us that we charge the same low rate for all credit scores. So whether you're an 800 or a 500, you get the same low rate. So make sure that you're making it affordable for everyone, and make sure you're being fair to everyone into doing that. And we are doing it on an unsecured basis, and we are filing UCCs. Next slide. As funding becomes available and you apply for funding, if that's what you so desire, and as you can learn more about that, find ways to lower the cost of the loan and the product. Use that money wisely. Use that money to make sure that everybody, because everybody deserves to be cool or warm during the summers and the winters. Find those community partners that are willing to speak your language and speak the language to your community. I can tell you that living in Phoenix, and we have found it very difficult to sometimes find solar vendors who are willing to go out into communities of color and specifically find people who are willing to speak the language of our communities. So vetting, just going to say, vetting is really important. There was something that came out from the CFPB about predatory tactics. It is real. It is real, and you need to make sure that you're partnering with the right people. But most important, believe in your lending, because it matters. Again, 113 consecutive days since the end of May until September of 100+ degrees in Phoenix. Hot. People died. So it really, really matters. So we're doing this because we believe in our community. And next slide. And these are people that can put it up that you can contact. You're free to contact any of us to ask us questions specifically about our loan program. Believe in what you do. Thank you.
Thanks so much, Robin. Robin's really been leading the way with credit union green lending for lower income communities. As we've heard from our speakers so far, this is a very necessary and very important opportunity for credit unions to provide affordable green loans to their members. We're really excited because there are many new sources of federal funding available that could help members access clean energy, but also make it more affordable, make it possible for credit unions to accelerate this green lending in a way that's affordable to populations who've never been able to afford clean energy before. Today we have Tucker, who will share with us a large piece of that through the Greenhouse Gas Reduction Fund. Tucker, if you could provide us with an overview of the Greenhouse Gas Reduction Fund and how self-help is involved in this transformational new opportunity, and how credit unions will be able to participate in self-help's program. And next slide, please.
Yeah, thank you, Neda. First, thank you to UNFCU for hosting this important summit, Self-Help. Today I'm representing Self-Help Ventures Fund, which has a subsidiary called Self-Help Climate Capital that is participating in the Greenhouse Gas Reduction Fund. But we have sister credit unions within the Self-Help family, Self-Help Credit Union, Self-Help Federal Credit Union. This is personal for us. We're headquartered in Durham, North Carolina, but have branches throughout the Southeast, including the mountains of Western North Carolina. So we lost 2 branches that are closed indefinitely from Hurricane Helene. We never thought hurricanes would be the problem in the mountains of Western North Carolina, But as we all know, climate change is real and impacting us all. So thank you for having this important summit. Next slide. So I'm going to give an overview of the GGRF, or the Greenhouse Gas Reduction Fund. It is $27 billion spread across 3 programs. The overall goal of this $27 billion is to take this money, leverage it with private capital, set up sustainable funding sources that will pass through community lenders like credit unions to get to primarily low-income people to make green choices. I think that video was very compelling. Marisol and Terri have made good points. Not only is it important to do this work to save our planet, to make it sustainable for our kids, but also to save our members money. So this money is intended to make the green choice not only the right choice for the world, but the right choice for your pocketbook. So how do these programs work? So it's broken between the National Clean Investment Fund, which is $14 billion. That's supposed to create this revolving financial pool to pass through intermediaries to get to members. Then there's the Clean Communities Investment Accelerator, which Neda will talk in more detail about, $6 billion. Inclusiv is one of the 5 awardees. And that is grant capital to help those community lenders build up their capacity so that they can participate in these programs. And then the final one is Solar for All, $7 billion. That's primarily passing through states. That is specifically for getting solar on lower income to lower income households. Next slide, please. All right, so one of the 3 awardees for the NCIF, the National Clean Investment Fund, is a coalition called Climate United. Self-Help Climate Capital is a member of that coalition, along with 2 other CDFIs, Calvert Impact and Community Preservation Corporation. And the great thing about the Greenhouse Gas Reduction Fund is it's part of the President Biden's Justice 40 initiative, which means that at least 40% of the money through these programs have to benefit low-income populations. What's even better about it is all of the awardees who are selected have committed to doing more than 40%. So Climate United, for example, has committed 60% of its funding will go to low-income populations. Next slide, please. All right, so what is this? So I'm going to talk, so there's a lot of different ways this money can be used for a lot of different groups. Since credit unions are primarily focused on our members who are consumers, families, I'm going to talk mostly about our consumer products. So the Greenhouse Gas Reduction Fund is trying to make, in this example, consumers make 3 green choices. One is how you heat your home, how you heat the water and your food in your home. So home decarbonization or electrification. The second is solar panels, how we create electricity. And the third is how we move around, electric vehicles. So we have created a suite of products that help families decarbonize, go solar, or drive electric vehicles. So in the home decarbonization space, think of a suite of products from mortgages to buy a green home, a mortgage to buy and renovate a home, or a home equity loan or some other consumer unsecured loan to do home renovations, to make your house more energy efficient and to switch from gas to electric. The second suite of products is solar. There's multiple ways you can participate in solar. You can own the panels on your roof, you can lease the panels on your roof, or you can participate in something called community solar. And then the third area, electric vehicles. This is both fully electric vehicles and plug-in hybrid vehicles. So those can be financed either new ones or used ones. And these all through this program is loans, which complement all the rebates that are out there that you need to learn about and the tax credits that are available. So the rebates and tax credits don't pay for the entire cost. So to make this accessible to low-income families, we have reduced cost loans at a high LTV. So the out-of-pocket burden for making these green choices is not there. We're trying to eliminate that so that when you make these green choices, when you put solar panels on your roof, or you make your home more energy efficient, you are saving more money on your electric bills than you're making in loan payments. Next slide, please. All right, so there's three ways that credit unions will be able, or three ways this money will flow, and two of which relate directly to credit unions. So one, I just talked about some standardized loan products. So you're all probably familiar with the, selling loans to the secondary market or selling participations. So that is the first channel, a suite of standardized car loans, solar loans, home loans that you can make and then sell on to a secondary market that is backed by these NCIF funds. The second is, what if you're a credit union that wants to hold the loans on your balance sheet? There's ways for you to benefit from this program with a loan to your credit union. You become the borrower, you use that money along with your deposits to finance loans to your members, and you hold those loans. Or if you want to de-risk your loans, you can participate in a loan loss reserve programs. So that's the second channel, is basically holding the loans. And the third, not as relevant for this group, is for bigger projects if they can get loans directly from Self-Help Climate Capital and the Climate United Coalition to finance those projects. Next slide. So this is just like, where do I start? And Neda will talk a little bit more about this, but if you're new to this type of lending, you should start in the CCIA program. Get the grants, get the training, do the training programs that Marisol was, that Robin was talking about from Marisol. If you're already into green lending and you want to sell loans, it depends on what type of loan. So I've been talking consumer because I think that's relevant for this crowd. But if you're into multifamily lending or commercial lending, you can partner with our coalition partners, CPC, or Climate United, which is Climate United Fund, which is part of Calvert. If you're interested in originating loans as credit unions, you talk to Self-Help Climate Capital. If you're a green bank or a CDFI, you talk to our partners at Calvert. Next slide, please. So this has been the announcements were made in April about the awardees. We've spent most of the summer negotiating with the EPA. Those agreements are now in place for starting up programs. Really in 2025 is when you should see these programs become fully operational. So Neda, I'll send it back to you.
Great. Thank you so much, Tucker. We're so excited about the Greenhouse Gas Reduction Fund. We're so excited about the program that Tucker the programs that Tucker just laid out, but particularly credit unions connecting to the National Clean Investment Fund through self-help. As Tucker mentioned, perhaps you are interested in this, but you're not sure where to get started. Inclusiv has been helping credit unions to get involved in this space for many years, and I'll walk you through some of the ways that you can connect. Can you click forward one more? I think, yeah, oh, wow, okay. So Inclusiv, thank you, Prasad, for introducing Inclusiv at the top of the session. We are a national network of community development credit unions. We are also a CDFI intermediary, and in 2019, we launched our Center for Resiliency and Clean Energy to help credit unions make clean energy more affordable and accessible for all people and communities. If you could go to the next slide, please. I will share more about our Clean Communities Investment Accelerator program in a moment, but first I wanted to share a little background on how credit unions can get started in this space. We have partnered with the University of New Hampshire for the past 5 years to offer a solar and green lending training and technical assistance program. Many in this room and many credit unions across the country have participated. We've trained over 400 community lenders, over 750 staff from community lenders in the past 5 years. And originally, this was funded by the U.S. Department of Energy and has received a lot of support from the federal government and lots of amazing foundations as well. So it's a free virtual training where credit unions can learn how to step-by-step build their green loan program. And we'll share a link in a few minutes for how you can apply for that. If you go to the next slide, please. I think we've mainly covered this by now from our other panelists, but just to make sure it's really clear what credit union green lending looks like, this could be a range of, can you click one more? I don't know why it's doing that. There are a range of different consumer products that credit unions have been financing, including things like rooftop solar, insulation, efficient appliances, electric vehicles, efficient heating and cooling, and many more. But these are loan products that can help lower utility bills, reduce air pollution, reduce energy and water usage, and they can be a range of different types of loan products, from unsecured consumer loans to secured vehicle loans, chattel secured UCC1, et cetera. And so these are the types of loans that credit unions are already offering, and credit unions have a lot of expertise in offering. And it is often credit unions adapting these loan products to finance green projects. So it's not a huge leap from likely what many of you are already doing. If you go to the next slide, please. And as we mentioned, to help credit unions get started in this space, Inclusiv has been selected for this program through the Greenhouse Gas Reduction Fund that's called Clean Communities Investment Accelerator. We were awarded $1.87 billion, and we'll be using that to provide $1.68 billion in grants to credit unions. So these will be competitive grants, and credit unions will be able to apply to Inclusiv. We anticipate providing grants to between 300 and 400 credit unions over the next 4 to 6 years. And the grant can be up to $11 million. We're expecting average grant size of about $3.5 million per credit union, and we want to make sure to really be able to have national reach with this program to reach folks all across the country. These grants will be available to credit unions to provide capital and operating costs for green lending. They also will allow the credit unions to lower the cost of energy upgrades for their members. So you'll be able to subsidize your loans with these grant dollars. And 100% of the grants have to go to support low-income and disadvantaged communities. So, Tucker mentioned that overall the Greenhouse Gas Reduction Fund has a minimum of 40% to low-income and disadvantaged communities, but this particular grant program, 100% must go to support low-income and disadvantaged communities. Next slide, please. So just a few details about this, or a few high-level points, I should say. All credit unions are eligible to apply. All U.S. credit unions, including those located in territories, are eligible to apply. We're going to support credit unions throughout the entire application process. We have staff to support the credit unions going through this process. So you might think, I don't know how to do a grant proposal. We will help you. The grants, as I mentioned earlier, will help you cover your operating and capitalization costs for green loan programs. And you'll be able to offer loan products that are already familiar to you, like unsecured consumer loans. There are a wide range of energy projects that may be eligible. I just mentioned some of them, like solar, like efficient heating and cooling. Will help you navigate all of that if you're interested in this program. Next slide, please. And okay, I'm just going to talk about this for 1 second. There's a lot to look at here, but the most important is that our next big step is that our pre-qualification form will open on November 19th. So if you're a credit union, you're interested in applying for a grant, the first step is our pre-qualification, and that will open with an online form on November 19th, and we'll also be having webinars to help walk you through how to navigate that. So if you could go to the next slide, please. Great. If you're interested, there is the link up top to our website. You can go there and learn more about the program, download our CCIA framework, and there's also a QR code on the bottom left for our green lending trainings. You can apply to those, and a QR code on the bottom right for our intake form. So if you're interested in our Greenhouse Gas Reduction Fund program and you want to hear more, stay on our mailing list, send us any questions, you can go to this form and sign up, and we'll stay connected with you that way. Next slide, please. Okay, great. So we are going to get into a few questions. I've received a note with some questions from the chat. The first question is for Terri. Terri, how much of your loan funding relies on state or federal programs?
Currently, about 20% per month of our loans are with some type of program, and those are set up through loan loss reserves. usually, and we have them across the country. We started here locally with Boulder County, and that was our first loan program we worked with, and we've kind of expanded from there. So it's about 20%.
Great, thank you so much. And then the next question is for everyone. So, what delinquency rate have you seen for your green lending, if any?
Well, we have. I can start. Sorry, we have 13,000 loans, and we currently have less than 1% of delinquency. I've charged off less than 15, and some of those charge-offs are the same member because the way we do our loans is we have well, when we started we had the 30-70 split, which was the ITC credit split off from the other loan to help keep those costs lower. So some of those were the same members. We've had about 10 members that have charged off their loans, and some of those were due to death.
I can answer for
us.
You
can't avoid.
Yeah, you can't avoid death. That's going to happen. We've had actually none from the energy loans that we've done. None of the, but again, we've only been doing this since 2022. We don't even have people really paying late. Air conditioning in the past, loan in the past go bad. So, but that was entirely, there was multiple loans regarding that. So delinquency has been low.
Great, thank you. And I think, Tucker, do you have any info on self-help's delinquencies? Or?
Yeah, we're a little bit like Robin. Our green lending is relatively, our direct green lending is relatively new. I'm not over that area, so I don't know the specifics, but the last reports I saw, I think it was either none or very, very low, but it's early. So we are planning we're planning for some delinquency, and we should have it. And that's why, we should take some risk. And that's why we have grant funds to support this lending and loan loss reserves, because we need to push the boundaries.
Great, thank you. And yeah, I think across the board, from the hundreds of credit unions that have taken our training and built their green loan products, we see very low delinquencies, and the loans perform very well. So I think most credit unions have been happy with their investments. We can take questions from around the room, or we can jump into additional questions that we have for the panel. Is there anyone who wants to jump in with any questions? Okay, so why don't we start with challenges? So I think we've painted a beautiful picture of green lending for everyone, but we know it's not easy. There is hard work ahead. What challenges do you see with Greenhouse Gas Reduction Fund? And Terri, why don't we pass this one to you?
The challenges for the Greenhouse Reduction Fund?
Yes.
Is that the question? I think for us, it's going to be identifying the individuals in the low-income communities. I mean, Robin has them coming to her door. As a online-only national credit union, we're going to have to really work with a lot of partners and get those partnerships. And we have a few already that we've set up and that we're currently working with our Clean Energy for All program. But I think that's going to be the biggest challenge for us and making, I really want to make sure that these funds go to where they need to go and where they're supposed to go, and identifying those areas and then talking with the people in those areas to get them to come to us, because it's sometimes real difficult to have someone come to apply for the loan before. Usually when you're in those underserved communities, and I'm from New Mexico and lived in them myself, when you need something, you need it now. And there's not a lot of planning involved. It's when your hot water heater breaks or there's a leak in your roof or something happens. So you're looking for that, instant. So it's your card or whatever financing that's provided by the person that comes to your house. So those are some things. Is really getting that education out to our members. and potential.
Great, thank you. And I think thinking about that, Robin, what techniques and approaches do you have for successfully offering green loans in lower income communities?
Well, a lot of communication, talking to, so, we do have a lot of low income members, but as Terri very correctly said, people don't do anything until it's right in front of you. Like, there is nothing worse than your air conditioning breaking down in July, and you knew it probably was a problem in April, but you didn't do anything until July and then having to get it replaced. And that is the way that, both low income and high income work. I'm not going to fix it until necessarily it breaks. So one of the things that we've done is really, really strengthen and are communicating consistently with members about the fact that we have these loans available. We're sending out a lot of marketing material for that. And then over this last summer, we instituted for if you came in and got a car loan, we could automatically approve you for a energy efficiency loan, an e-loan. We did that and gave you a pre-approval, and we made it good through, like the end of September. I think we're going to continue on to that because we did, towards the end of summer, start to have members take advantage of that and think about that. So one of the things you've got to do is communicate. The next thing is to really work with partners that go into the communities that you go into and talk about this, and everybody getting on the same page for referrals. That's one of the things that we're starting to see now, that some of these monies are going to become available. There's a lot of interest, like, okay, well, we're going to go out and talk about this, but we can't actually do any lending. Do we know anybody who's doing any lending? And, oh, okay, hey, we know that Marisol's doing lending. Let's communicate for that. So the trick is constant communication and bringing this out to your membership, making sure that they know that they're aware of what's going on and that they have the options. The other thing that we've done is that when we do close these loans, we hand them information about where to get rebates. The Department of Energy at energy.gov has some really good materials there that they can go to do that, because you need just constantly remind them that rebates are available to them to help further reduce their costs. And then I'll just say one other thing is that if they do get rebates and so forth and they want to apply those dollars to their loan to help reduce it, please make sure your programs have an ability to re-amortize those loans to allow them to have reduced payments.
Great, thank you. And we have a question right here.
Yeah, my question is for Robin and maybe for the other panelists. I'm not sure. So Robin made a comment earlier about the difficulty that you have with vendors to access people of color communities to sell solar panels. So I'm wondering, what insights can you provide? Like, is there an education component needed there for vendors and perhaps for the supply chain related to pretty much whoever the credit union engaged with? Just, I guess, some insights on that, and if that's a limitation to actually take advantage of these wonderful lending products. Thank you.
Thank you. That's a great question. So, yes, this industry, solar in specific, okay, not necessarily insulation and air conditioning kind of lending. Solar in specific is very geared towards going into upper income, and I'll just be plain, white areas, okay? And the reason for that is because solar lending that was done prior to all of us great credit unions getting into it was really based upon credit score, sometimes equity in a home, other things like that, that cater to those areas. So what we've done into finding, it's going to be a continuing problem, is that in my particular area, you would think like Arizona, it's so hot, we've got all the sun, we're gonna have all these people having trucks and going this. That didn't start happening till like a year and a half ago when everybody suddenly discovered, hey, there's going to be money available. And oh, hey, we can make money doing solar. So a lot of our people who did AC and insulation started to move into those. So we literally got on Google, started finding vendors that were in particular areas that we served, and through word of mouth started talking to some of these vendors and started to develop relationships and so forth. It's ongoing. Some of the money, like what the monies that self-help is getting, a part of the greenhouse, a lot of that money is supposed to be geared towards helping increase the supply chain and increase the training for vendors and to help workforce development. That's not the money that the credit unions are getting. So that's why working with a partner, like the partners that are going to be working within the self-help group, is to work with the community colleges and to start getting workforce development so we can go to get vendors in communities of color. So it's a group effort to get that done. But literally get a map out, Google it, and start calling people and telling them what you have and talking to them and see if they would be interested in working with you. That's how we're doing it, and we're continuing to do that.
I have one thing I can add is we were able to start a program with a nonprofit and that worked with a solar company to go out into those communities, and the nonprofit helped us with that first 30% down for the members. We've done about 10 loans through that program. So I really, and those partnerships are crucial.
Wonderful. Well, thank you so much. We have reached the end of our time, but we want to emphasize that credit unions can and should get started in this space. We have our green lending training program that we encourage everyone to apply to. We'll have our November 19th application or pre-qualification form open for our Clean Communities Investment Accelerator grants. And Self-Help's NCIF program is also opening, and as Tucker said, will be really available in Q1 of 2025. So please reach out to us, please stay connected, and thank you so much to our panelists. They've been doing incredible work. We're really honored to have them. Thank you.
So I know we saw some QR codes in the presentation about those various applications. We see those there. These slides are going to be available to everybody afterwards.